In the backtest, this straightforward EMA trading strategy had a success rate of over 70%. I'll be detailing how it works and the indicators I'll be using. The strategy follows a set of rigid guidelines to ensure that you will always know precisely when to take up a place. I backtested the strategy on the 15-minute time frame, so let's first choose this time frame. Then let's walk over to TradingView and add the indicators to the chart. Navigate to the Indicator Search tab, look for the hidden EMA Cloud indicator there, choose the 10 Eclipse indicator, and then add it to the display. Let's now examine how I will employ this indicator. 3 exponential moving averages make up the indicator. The red line represents the 200-period EMA, the white line represents the 89-period EMA, and the green line represents the 21-period EMA. The primary purpose of the indicator is to determine the market trend. As you can see, whenever the market is in an uptrend, the lower period moving average will be above the larger period moving averages. A color is plotted in between these moving averages to create a cloud. The 21-period EMA will therefore be above the 89-period EMA in this instance, followed by the 200-period EMA. The reverse will be true whenever the market is in a decline, which means that the 21-period EMA will be below the 89-period EMA, then the 200-period EMA. As you can see, by applying the indicator in this manner, we can quickly identify market trends, but one hidden application of the indicator is frequently overlooked. The indicator also works as a consolidation filter. This means that the indicator can show us whenever the market is ranging or moving sideways. As you can see here, whenever the lines are not far apart, the market is usually ranging, and whenever the lines start moving far away from each other, causing for a larger gap between the lines, the market is trending. Now that you are clear on how the indicator will be used, let's add the final indicator to the chart, which will provide the entry indications. Go to the Indicator Search tab, conduct a search for the BX Trender indicator, choose the Quant Therapy indicator, and then add the indicator to the chart. The trend line and the BX Trender line are the two major components of the indicator that we will be using for the strategy. We will maintain the default settings for the indicator and use the BX Trender as the entry signal indicator. The BX Trender provides long and short signals. A long signal is given whenever a green dot appears on the line, and a short signal is given whenever a red dot appears on the line. The trend line works as a confirmation for these signals. For a long signal to be valid, the trender line will need to be green and above the zero line. For a short signal to be valid, the trender line will need to be red and below the zero line. Now that you are fully aware of how each indicator used in this strategy functions, let's look at how these signs are combined to determine when to take a position. Firstly, let's examine the best times to acquire a buy position. Firstly, the EMA cloud will need to signal that we are in an uptrend. This means that the green 21-period EMA is on top, the white 89-period EMA is in the middle, and the red 200-period EMA is at the bottom. It is also important that there's a large gap between the EMA lines, signaling that we are not in a ranging or sideways market. If this is the case, we will look at the price action. To avoid entering the position at a swing high, the candlestick needs to pull back into or get very near to the white 89-period exponential moving average, EMA. Now let's look at the BX Trender indicator. It must give a long indication for us to proceed. As you can see, this occurs here. If the trend line is green and above the zero line, we can affirm that this long signal is valid and open the position. As you can see, all of the conditions have been fulfilled, so let's enter into a buy position. However, before we enter into the position, we will need to make sure that the price is trading above the 21-period EMA. For the take profit, we will aim for the next bearish indication that appears on the BX Trender indicator. We will set the stop loss at the most recent swing low and ensure that the trade is profitable before exiting if it is not. I'll sell the position because, as you can see, the BX Trender has given the next bearish indication. Let's look at another optimistic example now. Firstly, we can see here that the EMA lines are in the correct order, indicating that we are currently in an uptrend. We also see that the EMA lines are moving further apart, causing for a large gap between the EMAs. Secondly, if we take a look at the price action, we'll also see a pullback to the 89-period EMA. Thirdly, the BX Trender has provided a long signal. If we look at the trend line, we'll see that this signal has been confirmed because the trend line is green and above the zero line. Lastly, the price is still trading above the 21-period EMA, so we will enter into the buy position. Let's see how the trade develops. We will set the stop loss at the most recent swing low, and for the take profit, we will aim for the following bearish indication. As you can see, a bearish signal on the BX trender has been printed. However, we will not exit the position. This is because if we were to exit the position, the trade would not be profitable. Instead, we will either wait for the stop loss to be hit or for the next bearish signal that causes for a profitable trade. As you can see, the transaction is profitable due to the bearish signal, so we will close the position. The following criteria must be satisfied for a sell position. First, the EMAs must show that the market is in a decline. This is the case if the red 200 period EMA is at the top, followed by the white and then the green colored EMAs. It's also critical that there be a significant gap between the EMAs. If this is the case, we will need for the price to make a pullback to the 89 period EMA. Once this happens, we'll take a look at the BX trender indicator. We will need for the indicator to provide a short signal. Once the signal has been provided, we will validate it by checking the trender line. It will need to be red and below the 0 level. As you can see, all of the requirements have been satisfied, so we will enter into the position. Finally, before entering into the position, we will need to see that the price is selling below the 21 period EMA. We will place the stop loss at the recent swing high. For the take profit, we will target the next bullish signal. Now let's see how the trade plays out. We see here that a bullish signal was printed, but since exiting here would not be profitable, I will wait for the next bullish signal or for the stop loss to be hit. The BX trender has given a bullish indication, as you can see. This means that our take profit condition has been satisfied, so I will close out the trade. Okay. So now that you know the trading setup, let's actually do our backtest on a 5-minute time frame and see if the outcomes are reasonable or not. I just finished the backtesting, and these results have surprised me. Our win rate is 70%, and the profits end up at 11%. I would also like to mention that these results will be different when trading live, so always try the strategy for yourself before using it. Guys, feel free to run back and forward testing on various markets and times to gauge how well it performs. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.